This week, investors face a packed global calendar, with US PMI figures expected to slightly rise today and the key non-farm payrolls report later this week. Eyes are also on China's PMI data for clues on momentum in the world's second largest economy, while the European Central Bank's rate decision takes center stage in Europe. Naeem Aslam, Chief Investment Officer from Zaye Capital Markets, joins us now for a look into the economic week ahead. Naeem, thank you so much for your time today. Perhaps let's put economic news aside for a sec, right? What is going on in the commodity scene? Precious metals really selling off since last week, and we're seeing that being extended into this week. I mean, you ask different analysts, what's the reason behind this? And it seems like no one really knows what is going on. Is this just a simple correction?
Sure, thanks for having me. The whole weekend was a weekend where everyone was looking for answers behind this one. From experience, what I can tell you that a sell-off like that comes on the basis of few factors. Number one, when you see an explosive moves like the one that we have seen, they tell us only one thing, that everything was driven by margin, i.e. by margin means leverage equals greed. So everything was based on that one. Now, of course, there's another part of that story, which is like if there was an actual demand behind it, and then that structural demand has changed regardless of anything. Because in 2025, we have seen gold prices moving higher. We've seen risk assets going higher as well, like S&P 500 and Dow Jones Industrial Average and all of them. But coming back to that one, so when greed equals leverage, what happens is that in terms of an exchanges, in terms of a brokers, they begin to ask one question to their clients. They say, okay, these are leverage positions. Things have become incredibly volatile. You have to up your stake, up your margin requirements, your cash deposits with us. Now, at that stage, when a broker just comes out of a blue and then asks you that particular requirement to do it, you have only few options if you don't have money. Either you sell them or either you exit the position altogether. Okay. And I think this is what liquidated on the market and then created the huge crash that we have seen. Now, of course, we've discovered, we talked about this particular question from the perspective of it, this is a buy opportunity for investors. I answer that question by asking two different questions. Number one is, do you think that silver or gold price, will they go back to their all-time highs? If you believe that they are going to go back to their all-time highs, i.e. silver will touch 121 and then gold will go back to 5,700, then the current sell-off is a pure opportunity, even at current prices. Even if you don't want it to go all in, you can just start dabbling at the current prices. Number two, the question that you have to ask yourself is, what kind of an investor are you? Are you a long-term investor or are you a trader who looks at the volatility and look at them? If your answer is that you're a long-term investor and then you're looking at gold price, which is trading around 4,200, and then you know that the precedent is already been set for the gold prices to reach 5,800, you're going to find that opportunity as a gold being very cheap. Yeah. You will buy them.
So a lot of technicalities at play, a lot of dynamics at play when it comes to the precious metals. Let's get back to business, the business at hand. Manufacturing data, a big feature today. I want us to start off in China, right? There seems to be a disconnect between the official figures and the private sector figures we got out today. Walk me through that disconnect and what kind of picture it then paints for factory activity in China.
I think we have to look at things from a slightly different lens, not only the data, because you have to look at what has happened now and what is in the play right now as well. What is happening right now that you have come up a number which you compare it with the forecast, and then you can make your opinion of that number, whatever that number is. But what is in the play, that is very, very important. And by that is that everyone is currently and actively exploring opportunities for partnerships and diversifying their current supply chain from America, because
Yeah.
that trade war tariff has created so much injuries for the partners that they no longer want to rely on that medicine anymore, because they know that it has a more side effects rather than actual curing the disease. This is just the honest and the brutal truth. So with that aspect, even our prime minister, he was in China. Like, this is the first only good step that the government has taken in a long time, where Starmer went to China and started to explore opportunities without thinking of what United States will do or what other countries will do. And the same thing is also in play with EU as well. So that means the number that has come out today, you can make an opinion of that as of now, and you can trade your currency pairs, you can trade, you make that decision.
Okay.
But you will be missing the bigger picture, which is in the play. And then that means UK coming closer to China, other countries moving to China. That is only going to boost manufacturing overall.
Naeem, any concerns about what's happening domestically? We do know that consumption domestically has been downbeat. There's also concerns around deflation, the property sector slump as well.
I think, look, there have been concerns like that in China for sure, but that is not to say the UK, where we sit, the concerns are not there. The
Yeah,
property
yeah.
prices are pretty much the same. And then they're only becoming worse. If you are going to remortgage a commercial property or a residential property, your surveyor is going to come back and then they're going to give you a number which is lower than your pre-deal was, and whether that deal was 2 years ago or 5 years ago. Generally speaking, a property market will pretty much double in 10 years' time. But in London especially, we have not seen that. The prices are very much stagnant, if not gone lower than what they were back in 2014. So with respect to China, that is a growing economy, that's a developing economy. There is a huge scope of that one. So I think it depends what kind of a brush you pick up, and
Okay.
then how you paint Chinese numbers.
All right, so from a developing economy to a developed one. Over in the US, we have jobs numbers in focus out from the private sector as well as the public sector, with non-farm payrolls out on Friday. Your expectations on that front? We did see the last numbers tick up slightly. Do you expect that to continue happening? What does this suggest for, I guess, that pause that we are seeing at the Fed?
I think the pause is going to be very much the focus, in especially with aspect to political pressure, with aspect to new Fed chair who's going to be coming into the office. If you are expecting from the current Fed chair, no matter what the number is on Friday, there's going to be no reaction.
Yeah.
In terms of a policy decision, they are going to be just stuck in one mode, which is wait and see. Let's digest the data. Let's see how the numbers are going to be more. Let's not make a decision based on one particular economic set. But as you correctly mentioned, the last number did take higher, did paint a little bit more better picture in comparison to the previous numbers. And if this number provides confidence further, this just gives the Fed even more ammunition in relation to, you know what, there is no rush. There are no significant cracks in the system that we need to come out and that we need to put cement on it.
And then over in the UK, the Bank of England also out with a rates move sometime this week. Your expectations on that front? We did see the last inflation print for December, consumer prices moving further away from that 2% target.
Yes, unfortunately, things in the UK, they are only becoming worse and worse and worse, no matter how you look at it, whether you look at it from Bank of England's perspective, whether you look at it from consumer spending perspective, whether you look at it from a lending criteria, whether you look at it the policy perspective. The only light that we have seen in the last few months for this particular, with the respective policies, is that now Sharma is in China. And then now he's actively looking to make some deals. And he is doing a lot of that because of the pressure which began last week when EU and India announced this biggest trade-free deal. So now he's thinking, okay, we are not part of the EU. We already cause a lot of self-injuries. And then we, on top of that, we continue to cause more self-injuries by following the pathway United States has or the stance it has towards China. So let us be independent and then we can go and then we can do that. And I think if the government continues to take those particular steps, then certainly things will change. Because in this country currently, there is no capital inflow. The tax burdens are so high for everyone, whether that is someone who's working in McDonald's or in Goldman Sachs. The disposable income has evaporated. It just depends at the level of the consumption for between these two particular individuals we are looking at. So I think Bank of England should and must decrease the interest rate. This is a necessity before the whole commercial market collapses.
Yeah, it'll be interesting to see because expectations are for a hold on that front. Naeem, thank you so much for your time and sharing your insights with us today. That was Naeem Aslam, Chief Investment Officer at Zaye Capital Markets.